income tax. As salaried earners, I pay income tax. When you go buy at the shop, you have your VAT, you have your mineral taxes, you have your sugar taxes, and so forth, what we term sin taxes as well. Né? We all collect all this. We administer the tax. We are the tax authority in the country. So we police the tax. We don't write the rules, but we police them. Né? So if you have any issues in terms of the tax law, go speak to National Treasury. However, if you feel undone by the rules of the tax, then you come to us and then we will be fair to you. We have different platforms here on the SARS to try and make it as easy as possible for you as taxpayers to engage with the SARS, to interact with the SARS. One of those platforms, we're doing e-filing. We all, fortunately, we're even on Teams. We all have smartphones. Please make use of your e-filing platforms. For individuals, you have the app. But anything company or trust related, as the sister just recently spoke, you will then use your e-filing. E-filing is also accessible via your platform as well. We try as well have a diverse workforce. You see me smiling in front of you, Musna. We try and engage a friendly workforce as well to try as well to be everywhere. We obviously can't be everywhere, but we do try get to everybody to have access to the SARS systems there as well. To then speaking on business owners for purposes of the session. Now, what is expected of you as a business? Usisi just recently spoke about the types of businesses. There was a screen there. If you register your companies with the CIPC, this is your CCs, your PTYs, as well as your co-ops. The fortunate part about that is automatically, once you register your company, a tax number is automatically generated at SARS. So it's important to have that tax number. Know what it is. It'll always start with a 9. That's your company tax numbers. A trust, if you do register a trust with the masters, with your masters, you do need to actually physically go into a SARS office and register the trust. As well, individuals as well. Each and every single person that is employed must also have a tax number. If you own a business, you must have a tax number. We have thresholds where you need to start paying in tax, but if you are employed or run a business, you do have to have a tax number. So for entities that are new to business, CC, PTY, co-ops, for purposes of the session, I'll speak to that as well. I'll just briefly speak on the trust. So if you are new into business, there are 3 return forms that you need to submit as a business owner. This is whether or not your company trades. There are 3 businesses that you need to submit. You have an annual tax return form, which is called an ITR14, that you submit at the end of your financial year. Most businesses will generally have a February year end, but if you have a different year end, just keep the same concept notes because the same concept still applies. If you have a February year end, this means 6 months into the tax year, you must submit an IRP6, which is a provisional tax return form. You submit 2 provisional tax return forms each and every single year, so 6 months into the tax year, which is due the 31st of August, the second one, and the 28th of February is when you close off your financial year. At the end of your tax year, you submit your annual ITR14 as well as your IRP6. Whether or not your company trades, you must submit your tax return forms. We see at times that people say, business I haven't done anything for the year. Your tax return forms are still required by SARS. And to also say, we don't tax you on the money that you make as a business owner. SARS understands that each and every single business needs to spend money to make money. Can we all agree with that? Yes. You need to spend money to make money. That's right, no? Yes. So as a business owner, if you contract for 10 million rand, we don't want tax for 10 million rand. You must also spend your money. You must also pay your salaries. You must hire your equipment if you have equipment, depending on the industry that you are in. Obviously, you are the business owner. You know how your business runs. And on the profits that you make, for business terms, it's profits. From a tax perspective, it's taxable income. This is it's a portion of your taxable income that you then pay over to SARS. For companies, CC, PTYs, and co-ops, it's a flat rate of 27% from the first rand that you make on the profits that you make as a business. Very important. Nah? Profits. However, we also do have a tax regime, a couple of tax regimes at SARS, where we have a small business corporation as well as the turnover tax regime, where if you're a small business owner and you are and you're a fairly small business owner, and you wish to benefit from the reduced tax rates, you can then, if the small business corporation, it's a qualifying criteria. There's no application form for small business corporation. There are just requirements. Some of the requirements indicate that if your business must have a turnover that is less than 20 million rand per annum, that's your turnover. Members of the business must be living, breathing human beings. Third requirement, which generally what pushes up most people, is that your shareholders of the business cannot have any other shareholdings on any other business besides the company that you are in. Fourth requirement, cannot be a personal services company. Your personal services company are generally your professionals, your doctors, your lawyers, something that requires you, the individual, to do. So that is your professional services. And then your fifth requirement, cannot be a labor broker. Labor brokers are companies that ezifunela abantu imisebenzi. We all understand that, right? So if you qualify within those criteria, SARS then says you qualify within that small business corporation tax regime. SARS then says if your profits are less than 95,750,000 rand per annum, you then pay tax at 0%, which means you don't pay anything. Ne? I will keep emphasizing that. Ne? Don't vilify us, please. Okay, but if your profits are less than 795,750,000 rand per annum, then you'd pay tax at 0%, so you don't pay anything over. And if your profits are between 95751 to 365,000 rand, then you're only paying 7% of that amount of money. Ne? From 95751 to 365,000 rand at 7%. From 365,000 rand to 550,000 rand, then you'll be paying tax at 21%. Then anything above 550,000 rand is then back at 27% again. So we try to reduce the tax rates for small businesses as well. We also have a turnover tax regime at SARS as well. Turnover tax, you do need to indicate to SARS at the before your financial year, so before the 1st of March each and every single year, that you as a business owner will not turn over above R1 million. If you turn over above R1 million, you do not qualify for turnover tax. But for turnover tax purposes, you must turn over less than R1 million, and you do submit a tax return form annually. For turnover tax purposes, we don't tax you on the profits that you make. However, you do pay taxes on the turnover that you have made as well. For turnover tax purposes, if your turnover tax is less than 335,000 rand per annum, then nalapo paying tax at 0%, so you don't pay anything over. Then from 335,000 rand, and okay, the other figure runs away from me. I'm not gonna get everything right. I'll confirm the figure. But I do believe it's up to 650,000 rand, then you're only paying 1%. Then up to 735,000 rand, you're paying at 2%. Anything above 750,000 rand, you're paying 3% of your turnover. So it's up to you as a business owner as well to understand and know which benefits your business, which is best for your business. We want you to pay more. However, obviously, we also need to be fair to you as a business owner as well. So please understand your requirements as well as your obligations as business owners as well. When the previous speakers as well also talk, I want to run away from vilifying Sars. I must keep emphasizing that. I always suggest to business owners that, you know, when these accountants or these consultants, so they term it, before they submit your tax returns forms for you, they want the same information from you as well, right? So the same information that they declare on these ITR 14 tax return forms is the same information that you have as a business owner, right? Perfect. Now, I always suggest, as a business owner, if you were to sit down once a week, for example, at the end of your week, give yourself an hour, consolidate what you've done for the week, how much sales you've made, what you've spent as a business owner. Keep your records. If you have any invoices, any receipts, go make copies. Write that down on a piece of paper or in a little booklet that you consolidate. At the end of the financial year, this is the same information that we want as USAS. I'm not telling you not to go to accountants. Obviously, I can't do that. And accountants are an industry on their own, tax practitioners. Those guys also need to make money. They also need to pay us as well. So support them. so that we can make money. However, if you're a small business and you are in business and you are not at the stage where you need an accountant, please just consolidate your own records. Do it on a weekly basis, date your information, and then obviously you'll reconcile your little booklet on an annual basis from the 1st of March up until the 28th of February. This is the information that we want as SARS, and then you submit that to us. If there are any profits, you will then obviously pay over taxes. Depending on which tax regime you are in, you might not even need to pay. If you are just a normal business, you will then pay over to SARS as well. Ne? Make sense so far, right? We are not the animal people make us out to be. I'll keep emphasizing that. Nah? Okay. Speak briefly on the trust, Mos. Obviously, you register a trust with the masters with your master's office. A trust can, depending on whatever reasons you want for each trust. Trusts also are taxable, and the tax rates on the trust as well works on the same principle. A trust has assets. A trust will make money. And then on the profits that the trust makes, there's a tax rate of 45%. Usisa said 40%, it's 45% for trust as well. So on the profits as well, if the trust is not making any money, then obviously there's no income. A trust as well is also obligated to submit a tax return form. Tax return for a trust is called an ITR 12T. For the T stands for trust at the end. They submit the tax return form with the individual tax season as well. So then they declare the income they've made, and then any expenses that they've incurred, and any distributions as well. Because in a trust, you have a trustee, person who oversees the operation. You have the beneficiaries who benefit from the income that is made, and then whatever profits are left over is then a portion of that is then paid over to SARS as well. Individual tax rates run from 18% all the way up to 45%, depending on how much money you make. As a sole proprietor, you also fall into the individual tax rates as well. As a sole proprietor, if you run a business as a sole proprietor, same concept applies on the profits that you make, now, not necessarily on the turnover. On the profits that you make from 18% through to 45%, 45% is your maximum. You're making above 1.8 million rand a year. Then you're at 45%. Anything above between 18 and 45%. Okay, speak briefly on VAT as business owners as well. If you run a business and you turn over above R1 million, then you are obligated to register for VAT with SARS. If you turn over less than R1 million, we do not force any business to register for VAT. However, you can if you want, but once you exceed R1 million, you must register for VAT. Once you are registered for a VAT, you cannot render a service or sell a product without charging VAT on that particular product. VAT is not your money, it's SARS's money. When you go into the shop there and you buy your cool drink, the VAT portion that store charges you, they pay that money over to SARS most. However, if you are registered for a VAT and when you go purchase your equipment, when you go stock or when you go request a service from any vendor, the VAT that they levy you as a business owner, you have a right then to tell SARS, SARS is how much VAT I've paid over my 2 months, give me back this VAT, and then we'll gladly give that back to you as well. So it's an input and an output process. When I always make an example of this, if I'm in the business of selling microphones, I sell my microphone for 11 Rand 50. The 1 Rand 50 is my output tax because my product is going out the door, it's money coming into the business. However, when I go purchase, okay, let's just call it manufacturing my little microphone. For manufacturing my microphone, I need this little sponge, I need the wire cables, I need the metal end, I need the plastic cover, I don't know what it is, and I need the little rod, the stand. I need all these things. When I go purchase these things, the VAT that is levied when I go purchase, then tell SARS how much VAT I've paid, my input, the things I bring into the business. So it's money that I've spent. So when you pay over or when you declare your VAT 201 tax return form, it's your output tax, what you've sold, versus your input tax, what you've bought. And then the difference, depending on which is more, you'll either pay over to SARS or we'll either refund you back your money. We are not the villains that fear. Okay, if you are registered for your VAT, you have a VAT return form that you must submit every second month. It's called a VAT 201. You submit the VAT return form if you're on e-filing by the 31st of the month. If the 31st falls on the weekend, the last business days. If you're not on e-filing, it's on the 25th of the month. It's on the 25th of the month. No one should not be on e-filing. Please, we have platforms that are very easy to utilize to make use of it. And as a business owner as well, if you have any employees within the business that earn within the taxable threshold, these are individuals mostly. If you have any individual that earns anything above 95,750,000 Rand per annum, you are obligated as an employer to deduct tax from that particular employee. When you deduct the tax from the employee, whatever you've deducted as tax, you then pay over to SARS. You do this on a monthly basis because you pay most your employees on a monthly basis. That is what you term pay as you earn. If you are registered for pay as you earn as an employer with SARS, we also remove the obligation of paying over your UIF to the Department of Labor. It's a payment process that we remove from the Department of Labor. You then pay your UIF with your SARS as well, then we just hand that money over to Department of Labor. If you are not registered for your PAYE, keep your relationship with the Department of Labor, make your payments there as well. To speak on tax compliance, rather one more issue that I need to add in there. The audit cases, I've heard of sisters talk about audit. When SARS says you are being audited, I don't want people to be scared. We don't audit. On our terms, it's more a verification case. If you declare anything with SARS and we select you for audit, it's more to clarify and verify the information that you have declared on your tax return form. We just want proof of everything that you have done. And also remember, if you put anything on your tax return form, you must be able to provide proof for it. And you must keep that proof for a period of 5 years from the date of submission. So I always get this now. It's now 2025. We require 2018 tax return form. Someone says it's been 5 years. Nope, we don't work like that. From the date of submission, then you're obligated to keep your information for 5 years. So if you haven't submitted anything, we still require the information or the tax return form. If you have any debt with SARS that you can't pay off, also not to vilify SARS as well. I must emphasize this. If you have any debt with the SARS, we are not in the business of closing down businesses. We collect revenue. This is what we do. It's our mandate. If you have debt, come in, make a payment arrangement. We'll gladly do that for you. If you can't pay in one single amount, it's fine. We'll make an arrangement. We'll put an agreement in place. You pay on a monthly basis. Depending on the duration of your payment arrangement. Can't be for too long, obviously. We're not a loan place. We can't give you a 20-year payment per term. Almost always, your payment arrangements are for a year, 12 months. The majority of them are for 3 months, but depending on the debt and your circumstances as well, please do come in. Important to note, we do not give payment arrangements to non-compliant companies. So all your tax return forms must be up to date, and then we'll grant you a payment arrangement. Should you have any form or documentation outstanding, we will not grant you a payment arrangement. I mentioned at the beginning that it is the taxpayers' money. It is your money that ensures that the country runs properly. So if you do not declare your tax return forms, you are non-compliant. You cannot contract with any state entity. You cannot request any assistance from any state entity if you are non-tax compliant. Everybody uses this money. Everybody requires a portion of the money for any kind of assistance. It is your taxpayers' money. It is your money. It is there to benefit you as the citizens of the country. And all we want you to do is to pay your fair share. That is all we want you to do. If anything else that I need to mention, I guess I'll take that.
Thank you so much, sir. I suppose there's no way of duck and diving and not doing things right. The book of Galatians in chapter 6, from 6 to 10, encourages us to do things right and to do good, Bazalwan. At this moment, says our Tata questions and answers. I do have a question from my side as a government employee with a company that's about to be registered. How does issues of tax work out for me? Because we will talk amongst ourselves, probably lie to ourselves, that we get hefty fines. When you are already a taxpayer, on an annual basis, we do our tax returns as government employees. On the other hand, one has a business that is registered. So how does that work out for somebody like myself? That's question number one. Then the second question.
So there are a few things that I want to ask. First, about the trust name. If I have a trust name, then I have a PTY, and then as an individual, I am employed by the same PTY, so I am taxed by Sars. So does that mean I have to pay Sars 3 times because those are separate entities, even though they are registered under me? So if I were to pay Sars, am I paying at an individual level, paying as a business also, and paying for my employees, and also paying that 45% year trust? That's number one. Number two, when you spoke about that input and output tax, I just want to be clear first if I understood you well. I'm in the agribusiness and agro processing. Now those are two value chains within agri. Now someone said to me a few weeks back, I don't get into the agro processing business because SARS will tax you more. What does that mean? But I ignored it. So I just wanted to find out, so if your business has those two, for instance, with the primary, I'll say the primary agri, mostly we use fuel for pumping water and things like that. Vegetables are not normally taxed, if I understand well, but fuel is taxed. So there I have input and output, because for me to produce, I need the fuel. For me to sell my stock also, I need fuel. So how do I claim then the fuel tax, if I were to put it like that? I'm just making it fuel, there's a lot more, but just tax, if you will. Last one. Okay, let me think about that last one. Those two for in the meantime. Oh, last one. If you have employees that are not locals, that are earning beyond that 96,000, which is standard, how do they get taxed? Does the business pay those people, like your business? You have employees, your company is South African. They are not South African. They may not even be working for you here in South Africa, but they are part of your company. Do I still pay you, sir? I don't know if my question makes sense. Yeah, those three, I'll stop for now.
Maybe it's related to our facilitator. You have a business, you are working, maybe for government or for whoever. What is the tax implication, in terms of that? You have your day job, but you also have a business, or maybe businesses or other sources of income. So what would be the tax implication on that? And the last one, the amount of cash you are supposed to have. I understand some businesses work with cash. Is there a specific amount you're supposed to have? Is SARS able to follow on that? Is there an amount of cash and the tax that has to do with that? And but I understand that. if there are businesses that deal with cash, so what would be the implications, in terms of tax, nalamali, sitting?
Maybe something I didn't mention as well as business owners, because I understand most also running away from the vilifying SARS issue. As a business owner, as SARS, we encourage you to always be honest and truthful. Ne? Now, as business owners, we all understand when you start out in business, you are spending more money than you are making. That's right. Ne? Can we all agree with that? Okay. Now, on the ITR 14 tax return form that I talk about, if you declare honestly and truthfully on the ITR 14, your business can run at a loss, and we do accept a negative balance as part of your expenses. If your business runs at a loss in year 1 and a loss in year 2, by the third year you're running at a profit, before we can tax you, we must always take into account your previous losses. Did you know that? All you need to do is just be honest. If your business runs at a loss and you are declaring your expenditure accurately and honestly on your tax return form, you are allowed to declare a loss for your business. And if on year 2 or year 3 you run into a profits, before we can tax you on the profits that you make, we must first take into account your previous losses. This then says, on year 1, you're running at a loss of 25,000 Rand, for example. Year 2, you run at a loss of 5,000 Rand. In year 3, you make a profit of 20,000 Rand. At SARS, technically, you have a balance of minus 5,000 Rand. That's just my example, Mosne. Sure. So we don't tax you on year 3. Not that we don't tax you. Nah? It's very important, Mosne. SARS legally, when you say non-taxable and tax at 0%, those are two different things. Nah? Okay. Anyway, on the first question, I think the Uput and I also asked in the same manner as well. SARS, we look at the juristic person. So a company is a person, you are a person, the individual is a person, the trust is a person as well. So these are 3 separate entities. So we tax each entity separately. This is why one is at 27%, one is at 18 to 45%, depending on how much you earn, then one is at 45%. Now, if you pay yourself a salary from the business, when you take into account your expenditure, before you calculate your profits, the salary that you pay over, your salaries and wages, it's part and parcel of your expenses. So if you made a million Rand turnover and you pay 900,000 Rand in salaries, we can only tax you on 100,000 Rand. Makes sense, Mosne? However, this 100,000 Rand must appear somewhere else. Nah? So if you've taken, sorry, not 100,000 Rand, the 900,000 Rand must appear somewhere else. So if you as the business owner have decided to take 500,000 Rand for yourself, it's still taxable. You're not paying twice the tax, You've deducted it for the business, but it must appear in your personal capacity as earnings for 500,000 Rand. As the individual, you are taxed on your total income for the year. Now, this is something people always seem to always be shocked about. Opangela, what corrections, as you said, right? Yes. Elections come about, and you go assist. That's additional income. You have these entities that sell my bottle. I can't exactly name one almost. There's pots. There's little You do that. It's additional income. I buy my car. I refer up here to the dealership. I get the lower commission. It's additional income. I have izindlu endirentisa ngazo. Property, rental income. On top of what I'm earning from corrections, on top of what I'm making from the IEC, on top of what I'm making from the sales and my rental income, it then pushes your taxable income from 18% with the corrections to 45% with your other additional income. You'll then end up paying. All we want you to do is pay your fair share. That's what we want you to do, Mosne. Even as a business as well, if you're deducting anything from the business as well, it's a deduction for the business. We allow the deduction as well, but salary must appear somewhere else. So, yes, we're not taxing twice a single income, né? But if you move money as a salary to your personal account, it's taxed in your personal capacity. Né? That's how it makes sense. This goes in line with director's remuneration as well. You're the director of the company, you deduct money, and obviously you will then have to pay over. If VAT, for VAT purposes, we have standard rated, which is 15%, zero rated at 0.8. We have exempt supplies, which is not subject to VAT. Those three things. Standard rated, your standard rated supplies. Your zero rated, as Ma'am has said, your primary production. So your raw products, amasubisi, brown bread, mili, all these things must. However, even in agriculture, when you purchase a tractor yako, there's VAT on that, right? You can claim back a VAT yako. And on the question that you asked, the diesel that you purchase, there's VAT on your diesel. And I think on every rand that you spend, I think about 88 cents is diesel. You are also allowed to claim back the VAT on the diesel that you spend as well. So for VAT purposes, we have VAT standard raters, and then we have diesel VAT as well. So depending on the industry as well, not everybody qualifies for diesel. It's on land, offshore, and what's the third one? Okay, I'm not going to know everything. Okay, but yes, on the VAT as well, you can claim a portion of the diesel of the VAT on the diesel that you do pay. Individuals are individuals for tax purposes. Anybody who comes into the country and earns a salary from the country must pay taxes on the earnings that they pay. Whether you're a foreigner, whether you're local, if you're earning from South Africa, you must pay taxes on the income that you have made in South Africa. That's how tax works. It applies throughout. Everybody pays their taxes. Whether we also register foreigners for tax as well. Even for entities that operate outside the country as well, any source-based income that you bring into the country, you must pay VAT, you must pay taxes on it. For companies that produce products and they send out of the country as well, you still make a profit on those products, but the only benefit is that you don't pay any VAT on any exports that you make as a company. No VAT on exports, but if you sell locally, then you will pay VAT. Auto assessments. Auto assessments are for individuals. Auto assessments, there's a qualifying criteria for your auto assessments. It's very important as well to ensure that all your information is up to date with the Sars for auto assessment purposes. Because if you are selected for auto assessment, we do send out notification. We send out an SMS or notification via e-filing. Please just have a look and look out for that as well. I mentioned as part of the requirements for auto assessment, you must have a single source of income. Based on the example of Kufigi elections, that automatically disqualifies you from the auto assessment pool. So if you have, I know people tend to think it's not subject to tax. Anything and everything that you do is subject to tax as well. We cannot instruct a business on how to run your business. Some businesses run strictly on cash, some are invoice-based. It's your business. At the end of the day, we can't stop you from having multiple million rands of cash. We can't stop you from doing that. It's your business. You run a cash business. You are expected to have a lot of money at hand. That's the nature of your business. We can't stop you. All we want you to do is to declare honestly how much profits that you have made. And from the profits that you have made, we just want our fair share. In terms of the NGOs, NGOs and NPOs, fortunately the word says it itself, non-profit or non-governmental. However, those entities do not pay any taxes. I mentioned with any institution, you pay taxes on the profits that you make. NPOs do not pay any taxes on the profits that they make. However, you do need to apply for exemption. If you don't apply for exemption, you are not granted an exemption from your tax. We exempt the institution, not the individual. Kamanda butetenge qawe mosne. Upastor wenu eme phayana yabona mosne, all bling yabo. He must pay. The individual must pay, but the institution, the church in itself, its promotion of religious activity must. It's within the NPOs or within our exemption group, we exempt based on activity. promotion of religious activities, community programs, healthcare facilities, educational institutions, then we exempt the institution, not the individual. In the same breath as well, as an institution, you are exempt from tax. However, you have a shop in there where you sell apparel, is gepa, ihlangu, church stuff. That part of the entity is not exempt because now you're exchanging. You're making profits for the sale of your products. If a church owns property and they're letting out the property, now you're no longer specifically promoting religious activity. You're now rendering a business. So that part of the business will not be exempt. That's rental income. So yes, we exempt institutions depending on the activity. We don't exempt the individual. Very important, but yes, ma'am, we do exempt institutions.
Suppose in the next few years you get less than that 1 million. So am I allowed to do register? I'm not reaching that threshold.
So, you want my question?
Yes, sir.
I often hear people say, when you buy expensive cars, you buy art, gives you some way to get tax cards or reduce on tax. How does that work?
Okay.
That was the last one.
Yes, it's the last one.
All right.
It's the last one. It's a follow-up from the question that has made. That 1 million, is it a turnover per year, or is it the profit the business has made per year? Number two, when you have an accountant assigned for your business that does the filings and all, we've seen many times the way the accountants actually sabotage your business. I'll say sabotage because it doesn't make sense for someone who's qualified to mess you up that way. So you find that some of the accountants don't actually submit all that is required. All that is required by Sars. And then as the business owner, you remain liable for whatever costs that are there. So I wanted to find out, is there a way, who then does Sars go for? Because my understanding is that that person who is representing me is verified by Sars, right? Even though they are appointed by me, but they are verified by you as part of the team that works with you in helping me align whatever needs to be aligned for your benefit. So if he messes me up or she messes me up, and I end up owing Sars 950,000, which I don't have, but now because they have not done their work for years, and I was of idea that they have been doing what they're supposed to do. I have proof that they have submitted, but when it comes to you and your system, it's not there. So who then answers in that?
Thank you so much for responding to that.
Okay.
No. Just I know I'm the compliance. You don't mean is withdrawal of cash from your business also taken as part of your profit.
Okay, maybe to the VAT question first and foremost. Compulsory VAT registration is a turnover of 1 million rand and above. Compulsory registration. However, in the same breath as well, just because you are no longer turning over 1 million rand and you are registered for VAT, you must still levy VAT on your products. It is only when you stop trading that we deregister you for VAT. It's very important, mostly now where you are in business, things are not always going to be good. Things are not always going to be bad. Just because you're running into a bad patch doesn't mean business is not going to pick up again. So VAT, for an entity that is trading and is registered for VAT, we don't just deregister for VAT. You must prove that the business no longer exists, no longer trading, then we will deregister for VAT. But if you did register, you must still levy VAT, Muslim. The buying asset question. Remember, different countries have different tax rules. And in South Africa, we have our own specific rules. In having said that, in business, when you buy an asset for a business, you are allowed to write off a business, Muslim. And part and parcel of any equipment that you buy, any equipment has a lifespan. Electronical equipment, electronical equipment has a lifespan of 3 years. So if you buy this camera for 15,000 Rand, for example, you are allowed to claim a depreciation for the asset of 5,000 Rand over a 3-year span. If you buy a vehicle for the business, a vehicle is written off over a 5-year term. So the vehicle that you purchase for R1 million, for example, not telling you to buy a R1 million car, you are allowed to claim an expense for the business as well, depreciation of 200,000 Rand over a period of 5 years. So a business asset does depreciate. We all need to understand that now. Also in the same breath, I also need to tell you, when you buy an asset for a business and you use it for personal use, that is called a fringe benefit. The fringe benefit, we take the value of the usage of the asset and it is then taxed in your hand. Tax rules of different countries apply. Can't buy a R1 million car and claim it as an expense for a business, but you use it for personal purposes. If you use the vehicle for personal purposes, we take the value of the usage of the vehicle and then it's taxed in your hand. Yeah, because I did mention with the salaries as well, you're reducing this side, it must appear this side. That's how tax works in South Africa. When it comes to accountants or bookkeepers, the unfortunate part is that you, as the business owner, approach any accountant that you want. We don't instruct you to do that. You do it. And if you go to an accountant who is unauthorized or unverified, you did that. You, as the business owner, are liable for anything that happens within the business. However, as a SARS, we do have controlling bodies that we recognize. I think there's about 6 or 7 of them. You can find them on the SARS website, like USAICA, SAIPA, SEMA as well. SEMA. Yeah, well, I think there's about 7 that we recognize. If your bookkeeper or your accountant is registered within those controlling bodies, he will have a practice number with USARS. And remember, it is illegal for a tax practitioner to withhold information or not to do what they are supposed to do. Between you and them, you can report them to their accounting bodies, and I'm pretty sure they'll revoke your license. But as I say, it's a relationship between you and the bookkeeper. Ours is with you, no SARS. That's how it works. Okay, back to the cash business as well. We cannot instruct you what to do with the business. It's your business. You can, with Reserve Bank and banking regulations are bank regulations and Reserve Bank regulations. If a bank tells you you can't withdraw 2 million Rand cash, those are bank regulations. From a tax perspective, you can do whatever you want with your 2 million Rand. Years ago, just to make an example about this, there was many years ago, even this is a story I heard, a person was declaring a tax with the SARS. Turned out this guy was a drug dealer. Now the activity in itself is illegal, but for tax purposes he's declaring and he's being honest. So on the money he's making, we are not the police. Thank you very much.